Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you today. Well, same story as yesterday, pretty much. Everything is down except for oil. We'll talk about yesterday's action and what it means going forward. We'll talk about, of course, a big number at 8:30. U.S. jobless claims due out. There's a big number last week. There'll be a bigger number this week potentially. So we'll talk about the market's reaction to that. We'll take some questions from our chat on YouTube and on premarket.benzinga.com. I want to remind everyone also to check out benzinga.com/coronavirus. It's a nice little resource page that we built that's keeping track of news and stats as they come in. Guest today, Marc Chaikin. He'll join us in about 13 minutes here. And let's throw it to Joel here. Joel, what's the word here? Overnight.
Spencer, we got some green on the screen here. Yeah, come on. We're up 49 handles at 24.97, following through with that bounce off the close. Your pre-market high is 25.02. We got to get through that pre-market high. We got to take out the intraday high from yesterday at 09.75. And then perhaps take a run up at Tuesday's Globex high. But really important to clear 25.10 here this morning, or we just may go roll over and test the lows from yesterday. Crude, the news was kind of telegraphed. Trump going over there to talk to Putin in Saudi Arabia. Crude up 212, started to move in the after-hours session. Your pre-market high comes in, or your cash high comes in at 22.55. That matches your weekly pivot. That's a big level to get over, to get up to your four-day high at 23.44. Gold's rebounding, spent a little time under 1,600, but not for long. Up $18.50 at 1609.90. Silver outpacing gold today, up 3.48% at 1447. And don't look now, but Bitcoin's moving up on 7,000, up $475 at 6,595. So Triple D, I guess I kind of made a big deal about the rally off the close yesterday, but when you're down 1,000 points and you rally back a couple hundred, I guess it's nothing to get too excited about.
Yeah, just normal chop, I think, at the close there. Obviously, we've been talking about the imbalances at the close that come out at 350, and those do move stocks. I didn't notice anything crazy yesterday, though, because I've been trading them every day. So it wasn't like, whoa, the imbalances are going to rip us higher. We were just chopping around. So lots of chop. We get a little bit of a relief pop. I mean, a lot of shorts. One point to make, Joel, why you're seeing some of these end-of-day rallies is if you're short, and you're a day trader, you're always scared about holding overnight for one reason, and that reason is, what is, we're gonna have a press conference again. What if they say something? What if the Fed, all of a sudden does something? There's, reasons that day traders cover at the end of the day. I trade overnight. I hold stuff overnight. I try to trade market neutral though, but if you're just flat out, short in the market, you probably don't, if you're a day trader, you probably don't like holding overnight because a lot of things happen overnight. We know the wicked moves really happen overnight in both directions. Again, today is the same story. The catalyst for the rally this morning is obviously oil trading up substantially here in the pre-market. I mean, really, we've talked about it, out of the two, we have two main crises going on. Obviously, the coronavirus is 90% of it, but we also hiddenly have an oil crisis going on. And that is going to lead to a lot of bankruptcies. We saw one yesterday with Whiting Petroleum declaring bankruptcy. I think we're going to see a lot more. That's WLL. We're going to see a lot more of those to come. So anytime you get a 10% pop in oil, it's going to lift the entire market because the market is very, very nervous about the potential for a lot of companies to go bankrupt, oil companies, that is.
All right. Well, let's talk about some of the morning movers here. Let's just talk about movers, considering the virus. I mean, that's pretty much what the biggest mover
Well,
are.
I mean, the big moves today is oil. I think we should start there with the oil stocks. We just mentioned them. Obviously, we lost WLL yesterday. It's still trading. These things don't go to zero. We've seen companies go to bankruptcy and then stocks actually don't go to zero. I mean, PCG is maybe the best example of that, but there's not going to be a lot left for shareholders like in a stock like WLL. There's going to be a lot more companies to follow suit.
There's 47 cents left.
Well, 47 cents right now they're pricing in. That's the hope trade, but I would call that the hopeless trade. I think if you're buying a bankrupt oil company right now, there's better places to put your money. There's going to be a lot more companies to follow suit. So we know that with the oil, with the situation it is, at $20 a barrel, there's a lot of companies that just cannot stay profitable or even stay solvent at these prices. So unless we have a rip your face off rally and oil gets back up over $40 in a hurry, you're going to slowly see a lot of companies, oil companies, fade out here. The big survivors are still probably going to be Chevron. You can see it in the stock price. It's held up better. I've always said Exxon and Conoco. Those are the big three. There's a lot of other ones that are just basically lottery tickets at this point in time. There is going to be some players. There is going to be some survivors. So they're not all going to zero, but there's going to be a lot of them that do. What are your thoughts here, Joel? Let's just take it back to the overall markets. I mean, we get a nice rally in the SPY here this morning with the oil rally. Significant sell-off yesterday. Is this a bounce to be sold? What are your thoughts here as we rally 1.5% this morning?
Do you want my technical or my fundamental gut feel?
Well, it's funny you say that because I watched the Como press conference yesterday, and it was around 1 o'clock in the afternoon, and he's a good speaker, and he's talked about here's the facts and here's opinions. So first he gave all his facts, and then he gave his opinion at the end. So let's do it that way. Let's do the facts. So the technicals are the facts. Let's talk the technicals, and then give us your opinion at the end.
We had a low at Monday, which was at a good weekly level. You took that out, and I think everyone was looking for the bottom to fall out yesterday. But in all reality, you recovered Monday's low, you recovered the weekly level, and you're moving yourself away from that level. So that's good. All right. If you had your blinkers on, there was no virus, that's what you would be saying, right? And the low was in, we're bouncing up. We're going to do some work in the 2500s today. And then we're going to work our way. I mean, you got a roof from earlier in the week and at the end of last week. Let's just call it 2630 area. So that's what I'm looking at technically. Fundamentally, I just don't know how you could value companies. I don't know what the earnings are going to be. I don't know how high unemployment's going to be. I don't know what the stimulus is going to do. Restaurants are closed. Hotels are closed. Entertainment venues are closed. I mean, unless there's some kind of immediate cure or snapback, then I still just remain very skeptical on the market. And as far as long-term investing goes, I just don't have the heart to deploy a lot of assets yet.
And what about this? But what about, it's so crazy out there that the SEC is giving extensions for earnings filings. The companies don't even know, they can't even get their own house in order, right? How are we supposed to know anything when they can't even figure it out? They're all withdrawing their guidance. They don't even know what their earnings are. I mean, they're getting an extension on their earnings reports here. So we're going to have a completely unusual earnings season coming up here.
Oh my gosh. Oh yeah.
Let's just talk it overall. And we got 5 minutes, and we'll continue maybe the conversation with Marc, because we know we're not going on a tangent. It'll be 5 minutes. But if you just talk the overall situation, it is not good. April was said yesterday by the White House, and that was probably the comments that spooked the market. April is going to be an ugly month. We are going to get a significant amount of more cases and a significant amount more deaths. That is going to spook the market. We have absolutely no hope of opening the economy in April. Probably no hope of opening it May. Yesterday, I watched Pence, and he was talking about June. That's what Pence was talking about yesterday. So, trying to get a kickstart back in June. So April and May are a write-off. The question is, how long can these businesses survive with the economy closed? You know your cruise lines are going to be in deep, deep trouble. We already know that. You know, the airlines are in deep, deep trouble. You know which stocks are in deep, deep trouble. But there's going to be a lot of companies that are in somewhat trouble that are going to be in deep trouble too if this goes on for 3-6 months. I mean, it goes on for a month, a lot of companies going to be fine. It goes on for 2 months, maybe going to be fine. You go on for 4, 5, 6 months where we're in like a social distancing period. It's concerning. So the unknowns here, and nobody knows. So, you know, somebody says, oh, I know we're going to get open by June. Nobody knows anything. I don't know when we're going to open. There's no idea. Pence is just guessing. Pence is guessing. We don't know how this is all going to materialize. So if you have any money in this market that you need, this is not the time to deploy it. I saw somebody, you know, saying they were margining out their account on Boeing or something. That's insane. That's insane. I mean, Aubrey McClendon, CEO who passed away from Chesapeake, really believed in his own company, and he bought the stock on margin. Like nobody, you know, believed in his own company more. He ended up, you know, losing all of that plus a lot of borrowed money by buying on margin. Buying stocks on margin in your investment portfolio, I think is nuts, in my opinion. Trading on margin's a different story. You're managing it, you're getting in and out. You day traders, I use margin. But when you're throwing, you know, and saying, I'm going to go on margin in your investment portfolio, if you're 100% margin in your investment portfolio and the stock market falls 50%, your entire investment portfolio is gone. If you're in cash, like if you're, you know, only like 80% or 90% invested, you still have your stocks. You can never, you know, blow out your account if you're not using into margin. You will still have some stocks at the end of it. So all I want to say is this is not the environment to go all in. We do not know how it's going to end. There could be some money made. Maybe the cure comes out tomorrow. Maybe a vaccine comes out sooner than expected, even though Scott Gottlieb on CNBC was saying 18, you know, it could be up to 12 to 18 months for a vaccine, or maybe even longer. So, you know, the hope for that is not probably in the near future. So when you just analyze all that and you look at this market, what it did, it really feels like it was just a bounce in a bear market. I think the bounces are still to be sold. This is my opinion. I think the news flow and logic says the news flow is going to be terrible still coming up here, especially for April and maybe even into May before, you know, we get to the top of this thing, what they're saying, and the apex are saying at the end of April. I don't see a reason to just jump in here and start buying stocks and call the bottom. Financials are a mess. The banks are a mess. You know, those are close to the lows. You know, and you know, obviously, you know, money is important, but you know, you look at these things and you think, man, you know, a lot of bankruptcies are coming your way, banks. There's a lot of issues. So, I mean, with all that being said, I want to own some stocks. I never want to go to 100% cash, but I don't want to be all in either. And like I've said on my investment portfolio, I'm sitting about 75% cash right now. So I was up to 80. I put a little bit of money to work. We know the stocks I talked about. I bought 6 stocks in partial pieces, but I'm still sitting with a lot of cash because I think there could be another huge leg down. I would not be surprised if the market retests those lows and takes them out. It would not surprise me whatsoever. And I would not surprise me if we fell to like Fari Hamzei's target of Dow, what do you say, 16,000? Is that what Fari said? 15 or 16? I mean, that's possible. That's on the table. I'm not saying it's going to happen, but it's on the table. I don't see a catalyst unless we get a cure tomorrow. I don't see a catalyst for us to rip up here to new all-time highs. So I think the path of least resistance is still down. As a trader, I'm more inclined to sell rips than to buy dips at this point in time.
I have to agree with you. I think that the best, you know, besides the other technical thing that I mentioned, just the raw numbers, the market is calming down. So the average daily range is just slicing down. We were over 200. Now we're down to 162.50. So, you know, maybe we're not going to, you know, whoosh down and test the lows. But I've talked with some different traders and they're adjusting their trading styles. I mean, the best thing in here is just if the market can just quietly consolidate, bring those average ranges down. Like Dennis, you were plenty worried yesterday. Like
I'm plenty worried today.
Yep.
I'm still plenty worried. Don't kid yourself. Okay. I would not have 75% cash in my long-term investment portfolio if I wasn't plenty worried. You know, it's insanity. I'm 43 years old. It's insane to have that much cash, but this is my job. You know, some people can just, you know, if you're a passive investor, you just ride it out. But, you know, I feel like I can extract alpha in my long-term portfolio by timing the market better. So not only am I going to make it on the trading side, I want to make it and manage my investment portfolio better than the next guy. So by me selling, and then trying to rebuy lower, which I've already rebought. I sold my Activision Blizzard and I rebought. There's a couple stocks I rebought. I sold my Qualcomm up in the 80s. I rebought half of it at $65, last week when we talked about it. So, Micron, I sold. I actually was going to rebuy Micron, but I had the good earnings. It's starting to look weak here again. I might get a shot in the lower 30s. I had an order out there to buy it at 40, and it expired because I had sent it from a few days ago, and I didn't put it back out there in the long-term portfolio. But it's all about, and my perspective, and bring Marc on in here in a second. I mean, I'm a money manager. I'm managing my own investment portfolio. So obviously I'm going to do trades based on how I feel, how I'm reading the charts, and how not only reading the charts, but how I'm reading the
news flow, Dennis. News flow.
I'm all about the news flow. We know that. I'm a news flow trader. I trade the headlines. I trade the news. I trade the news flow. And the news flow in January, it was, we already talked about that. The news flow in January looked like, hey, there's a possibility this thing could come over here, and I don't want to be all in on the markets right now. That's why I lighten up. You don't go all in. But at this point in time, if you're coming here selling now, it's hard to say. Like we're not at a coin flip. I think it's still, the bears are still leading here. I think we do go retest those lows, but we're not at a point here where if you're all in like that, you should just be selling everything now. I mean, you're down 30%. A lot of bad news is priced into this market. How much of it, though, if this continues and we start to get bankruptcies because we're closed for too long, how much of that continues, I don't know. But I still feel like the path of least resistance is down, and that's why I'm not betting heavily on stocks.
All right,
Marc's here, though. He's hiding in the background.
Let's bring on our guest, Marc Chaikin, the founder of Chaikin Analytics. Marc, good morning.
Good morning. How are you?
I'm doing good. Before we start, Marc, I'm just curious. The past few weeks, I don't know how long you've been social distancing for. We've been doing it for about 3 weeks here. How hard I'm just curious, on a scale of 1 to 10, how hard have the last 3 weeks been for you, just personally?
It's been a well, if 1 is easy, it's a 1, but we're blessed. We're up here in the country, as you know, in Connecticut. Access to everything we need once a week, twice a week.
Good.
We're cooking. A lot of people are cooking.
Yeah.
We're in touch with a lot of people from New York, Philadelphia. They're handling it well, but I'm talking about upper middle class to wealthy people. What my concern is in the lower income neighborhoods where you've got kids home, there's a lot of healthcare providers in those families who have to go to work. There's a lot of distress in places that you and I don't normally interact with. The rent check, the utility check. Here's another thing that's stressing people. To get your $1,200 check, you have to have filed a tax return. If you're a low-income earner or on Social Security, you have to file a 2019 return. Well, to do that, they can't afford an accountant. They've got to go to a community tax center. They're closed, or they can't get there. So the fact that I'm enduring this well is nice, but there's a big swath of America.
Look at the other 99.9%.
Yeah. But having said that, the 1% is going to start feeling some pain as well when you start looking at the social trends, rent strikes being organized digitally in New York and Los Angeles yesterday, people talking about not paying their utility bills. So there's some ripple effects and second and third order effects that make Dennis's forecast sound mild. Dennis, I agreed with 98% of what you said. I'll take exception.
What was the 2%?
Well, 2% is if you're a passive investor in this for the long term, you write it out. If you haven't raised some cash, you don't write it out. In my view, you use rallies like we just saw into Monday to raise some cash. And the reason is you're less likely to panic at the bottom.
That's a good point.
I've seen, in my career, I've seen thousands of people panic at the bottom because they didn't have cash.
I mean, this is,
that's a really good point.
It is a really good point. The cash makes you feel more comfortable to be able to hold through it. And you need to analyze what's my, comfort, how much money, I look, this is the way I was looking at it back in, just, a few weeks ago when we started going down, and I was like, do I want to go to 100% cash? It's like, I looked at how much money I have overall, and I looked at how much money I have in stocks, and I said, in a worst case scenario, and we don't know worst case scenarios, but I'm saying, could I stomach my portfolio going down 70%? Because it's not probable, but I mean, in this environment, who the hell knows? So take, what you have in stocks and say, if it went down from this point, say another 50%, can I stomach that? And if you can't, then you need to raise some more cash. So, if you've got, 100 grand in stocks, can you stomach another $50,000 in losses? That's, what you have to ask yourself, because we don't know how this ends. Nobody knows how this ends. A cure could come out tomorrow, or some type of therapy, and the market could really rally on that. Or this could get really ugly. If people start getting sick, here's a really ugly scenario. People start getting sick in China again as they try to reopen it, and they have to start closing it up again. That's the worst case scenario, because everybody's looking to China as the hope right now. So, I mean, there's a lot of different scenarios that are on the table here. And, there's a lot of bearish scenarios. And that's why I want to sit with a little more cash to be more comfortable right now, like Marc is saying.
We're on the line with Marc Chaikin of Chaikin Analytics. Joins our show every 2 weeks to give us his long seasoned outlook on the markets. Marc, I think the most frustrating thing for me when I talk to people and family and friends and relatives and stuff, when you talk to them about the market, they look at, well, they can't sell now because they lost money from where the top was in the market. And I try and say, no, you didn't lose money. You didn't maximize your gain. You have to look at where your cost basis is. And in that mentality, I think even, Lisa was on the show.
I just want to interrupt you, Joel. Even if your cost basis is higher, that
Yes.
doesn't matter at this point in time. I mean, it's all about what you can stomach. Marc made such a good point. Some people can stomach, losing 50, 60, 70% of their money. I mean, we lost 57% in the financial crisis. In the tech bubble burst, the NASDAQ lost over 80%. Now, that was a valuation issue. This is a completely different animal, though. Like, Marc, what are your thoughts here? Because, you've said, raise cash on the rallies. What are your indicators showing? I mean, what are they showing here? Like, it feels like this was just a bear market rally here, like a dead cat bounce, because nothing goes straight down. It doesn't feel like this was the start of a new bull market, as I read in that one headline from the one newspaper.
Well, I feel is not the right word. This was a rally in a bear market. Without question, it came to a 382 Fibonacci retracement. Indicators don't mean anything here, Dennis.
True.
Levels do. So the retracement 382, right on schedule, 20% rally or so, NASDAQ leading the way. That's all fine. One thing, though, the utilities led the way on the rally, which is scary because that's not the way you want to see a rally happen. So that was another reason that you wanted to sell that retracement. And there'll be more of them. Who knows what this employment number is going to be? You could get a big rally if the unemployment number at 8:30 is better than expected. But I think you have to have some core principles here. One of them is capital preservation is more important than capital gains right now. And that speaks to everything you were talking about. And that's why you're in cash or partially in cash. And everybody should be, in my view. The other thing is that you got to look at historical bear market patterns. Once you exceed 30% on the S&P on a closing basis, you typically go down at least to the 50% level, which is 1700. Could it be different? Yes, if a vaccine or a treatment happened tomorrow. But there's also the medical people who are telling you, don't get complacent if it looks like the wave has been dampened, because let's say the curve in New York City drops, we've dampened it. Well, that means day 2 from the top is still a terrible day. It's not going to zero. That's what people aren't getting. And all of this speaks to the fact that this bear market could be longer than people expect, even with positive developments along the way.
I just want to interrupt with one thing. The Treasury did reverse course yesterday. Those Americans who didn't file tax returns are will still get the $1,200 payment automatically into their bank account. So that's no longer a requirement to get the money.
That's excellent. I didn't see that.
Yep. As of yesterday afternoon, I believe. So
Excellent. I mean, some of the things that are happening that are the average investor doesn't even focus on. Mortgage servicing companies. The companies that service your mortgage are on the line for your payments. So if you don't pay this month because you don't have the money or whatever reason, they pay it for you. They'll do that for 2 or 3 months. Well, if this thing goes on longer and longer and people don't have the cash to pay their mortgage or their rent check, someone's on the hook for that. It's not like it just goes away and the Fed can't wave a hand over it and say it'll be all right. So the real estate trusts are seriously in trouble. The banks, which is what you saw yesterday, have a problem. Municipalities have a problem because where do they get the bulk of their revenue? A, sales taxes, and B, real estate taxes. So if the landlord isn't getting paid, he's not going to pay his real estate taxes. So municipalities have a problem. There's a ripple effect, the second and third order effects. This thing is just not going to go away. As I said on that special we did at the close last week, this is not about picking a bottom. This is about coming through the other side whole and being in a position to accomplish your whatever goals you have for your family and your retirement. We can't let this be the Great Depression because we can prepare for it. In the Great Depression, people couldn't prepare for it. The banks went out of business so quickly that there was nothing you could do. You lost everything. People can prepare for it now by raising cash, by putting it into safe places. If we don't have a Great Depression again, there will be safe places. Wells Fargo, J.P. Morgan, Citi, hopefully safe places, Vanguard, Fidelity. So that's my message to people. You can do something. You don't have to just sit there, put your head in the sand and pray.
yeah, those are all really good points. I guess I was going to ask you if your 50% retracement target was still online, but you don't seem to be interested in picking a bottom. So
Well, a 50% retracement.
From the highs.
Oh yeah, no, I think
yeah.
1700 is a realistic target. We don't have to go there, but based on the last 8 bear markets where we exceeded 30%, the likelihood is 50% down. It's also a retracement from the bottom at 666 in 2009. So it's a 50%, roughly a 50% retracement of that level. All it is a guideline. You watch the support levels coming down. If we break the previous low, then you're looking at 2000, 2100 as a support level. But this is like water going through a dike. It once, and by the way, there's something you said that was very smart. Volatility is coming down, and this relates to those gamma traders that I'm just starting to understand, who are now not in a position where they have to chase every decline down or every rally up. So yesterday, if the gamma traders were in the position they were in a week and a half ago, we probably would have been down 10% yesterday. But the loss was limited to 5% because natural buyers stepped in and you didn't have these waves of protection heaped on protection. And I don't know if you've talked about that on air. I'm just starting to understand what that's all
No.
about. It's about market makers being on the other side of trades. And there's a level where they're underwater and they've got to chase every rally up and every decline down. That ended with the quadruple witch expiration. So that's why you're seeing Joel,
All right,
volatility down.
I'm gonna interrupt you here. I'm gonna interrupt you here, Mark. We're about 30 seconds away from a jobless claims number. I'm going to pull up a 1-minute chart of the S&P futures just to see how this thing moves. The estimate for this week's number, the consensus estimate, 3.1 million jobless claims filed last week. That would be just below the week before is reading of 3.28 million. You would also expect the reading from last week to get revised higher. And the number is, let's see, continuing jobless claims, 3.029 million. That's for continuing initial. What is that right? 6.6 million?
That's what I was
Oh
looking
my
for.
God.
Yeah, I was looking for 6.
Oh my. 6.6 million initial jobless claims filed last week, excuse me. That doesn't even account people who are being furloughed, who are still employed but can't get paid. Brian Sazi from Yahoo Finance tweeted this morning that this week alone, 250,000 workers from Macy's and the Gap have been furloughed, so this doesn't even count. This number doesn't even count them. But 6.6 million people filed for unemployment last week, double the reading from 2 weeks ago. Holy cow!
Yep. Restaurant workers, retail, you add them up, it's going to get.
Auto work. Well, I don't know if the auto workers probably still are not included in that. They're probably just furloughed.
Oh my God, Joel,
Yeah.
what are you seeing out there?
What am I seeing is at this point in time, they're trying to buy the dip.
Yeah, the
And,
futures are not, at least I'm
yep.
looking at the futures on TradeStation. Maybe they're delayed, but
No.
they're not dropping.
No, I was looking at mid-range on the session. I was just crowing on that. If I was a purely technical trader, I would have bought that because we were above the weekly pivot. We're above the lows for the week, and we've had a strong session. But I'm not a technical trader today, and I didn't buy the mid-range at 79.25. We went down to 76, 75. You're looking at a Ted bagger. We're holding up to the highs of the session. So
Yeah,
the
futures are
market is
actually rallying here.
discounting. Yeah, we got to wrap. And we were talking about this with Dennis on the pre-market show. I mean, the market is for the most part reacting rationally. Like when there's bad news about the virus, we go down. When there's good news, it goes up. To me, this is not a rational reaction to the fundamental information.
Well, it is though, because you know
Okay.
what? Everybody knows the expectations in the economic numbers are for an epic disaster. Every single economic number, they're expecting a disaster on. So it's not surprising. Same thing, when we got the jobs numbers last week and everybody's like, how did we rally on that? We ripped on it because it's all about expectations. And it's not even about the numbers in themselves. Everybody's just expecting a disaster and we got a disaster. So there's no doubt, even if it misses, like the estimate it's not even about that 3.1 million estimate. It's about a disaster. A disaster is a disaster. We know all the economic numbers are going to be a disaster. That's why they're actually rallying them on these crazy, horrible numbers.
Well, there's some good news, Dennis. There's some good news in here. In terms of what you're describing, it means that the algos have reprogrammed their news parsing. Because if this were a week and a half ago, the market would be down 1,000 points. So the algos are either less active in the market or they have reprogrammed. So this is also bringing back a little bit of stability and sanity to the market, even though it's unknown. And I agree with Joel, it's crazy, but it's crazy like a fox. The algos have clearly reprogrammed. Can I ask you a question? Because you've got some experienced traders on the screen with me. I bought a vertical put spread 2 days ago. When the market was down at its lows yesterday, I took my profit. And I felt like I was sort of violating my principles because I bought it to protect my wife Sandy's portfolio where she's 50% invested.
Yeah.
But when I saw a double in the trade, and these were in the SPYs, I just felt compelled to take it. Now, this morning, I could buy that back at a much lower price than I sold it. How do you handle protection versus trading profits in the options market?
I have struggled with this question for my entire 20-year trading career. Because as a trader, you're looking at the things all the time. And, and I was in the same thing. I bought puts, and we talked about this. I bought puts back in January on my invest portfolio. I had not done that ever. I'd never done that before, like bought puts on my investment portfolio. I've always just been, you ride it out. I'd move around the cash a little bit. I'd raise, a little more cash if I was nervous, or I'd, get more aggressive, investing if I wasn't nervous. But, I flat out bought insurance. I flat out bought puts, and I've never done that. And, I wrote it for a while, but the trader in me made me take a little bit off when we dropped, from We were on SPY. I had bought the 333 puts when SPY was at 333. And when we got down to 290, I took a little bit off. And then we bounced around a little bit. Then we got down to 280 and I took a little bit more off. Then we got down to 270. I took it all off. And now we're 246. I don't have any protection left. So I'm like, so the trader in me actually screwed up. And I had chances, like the trader in me, if I would have put that protection back on, there was some good Fed bounces in there that I probably could have put it back on at a better price. But I never put it back on. And that's, what basically happened is, and as we tank here, I'm trying to look at this, my stock's going. But it's hard to separate trading from investing. It's so hard to do as a full-time trader.
Yeah,
Mark, my comment would be, twofold on this. One, when you have that temptation, take off half the position. If you're trying to hold it as a long-term play on the market going back to the lows, but you can't resist the profit, take half off. Because if you would have taken half off, you wouldn't have, I don't even know where, how much better you're going to be able to get it on now. But at least you satisfied your temptation to take a profit, and then you also have stuck with your long-term position. The other thing I would have to say about that is you gotta, I think, and what the market's trying to tell you is you gotta dial down your expectations now on trades. And we had that crazy volatility and that crazy movement. So, yeah, maybe you're hoping it to go, cover that thing at 2,200 or whatever. But I think it's going to take longer to do it. And I think you either got to be more patient and dial down. And, with a vertical spread, you are on the sell side. So you are bringing in some decay. But I just think you have to, overall temper your expectations until we start heating up again with the 200-point ranges.
I like that. And you're clearly psychic because the short side of that trade was the 220 S&P put. So you knew what I was thinking. And I do think that if people are going to do position insurance or trade the downside, you got to give yourself time. I was in the May 1st weeklies, so I had a month of time.
Okay.
And I will tell you that the vertical still worked better yesterday than buying the 250 put outright. It was a big difference. So I think vertical spreads sometimes in the short run.
Mark, it helps so much because the premiums are so high right now.
Yeah.
So when you come in here and you're paying these crazy premiums, I mean, the way you're doing it makes so much more sense in an environment where it's crazy expensive just to flat out buy insurance. When I bought it back in January, I kept saying how cheap insurance was. I kept saying on the show, I bought those 333 puts. I went out to June. So giving me 4 months, and I only paid like the equivalent of less than 1% a month for protection.
Wow.
It was just crazy cheap back then, but the VIX was 13. It was, before the whole, and the only reason I said that, I said, is if this virus comes here, and I said this on the show back in January multiple times, it's going to get ugly. We don't know it's not going to. We hope it's not going to, but if it does, the markets could seriously fall. And, I said, I can stomach a 10 or 20% fall. I can't stomach a 50% fall. And that's why I brought protection in my portfolio. Again, I screwed up because I lifted the protection too soon. And when we got the 20% fall, 25% fall, I was like, okay, that's good enough. And, and obviously, the trader in me messed that up because I should still have the hedge on right now and I'd be a lot more calm. But, with that being said, it's very hard to separate trading and investing. But the way you're doing it with the verticals is so much in this environment, it's really the only way to do it, because just flat out buy puts in this environment here right now is just too expensive.
Dennis, I hate to tell you, but you are calmer than normal. So something in you has centered.
Sometimes.
Mark, the other thing too is, where I've had some success is kind of legging into stuff. Like, so if I, let's say I had sold like a 256 or bought a 256 put, and I could get a huge lead on, and get a really nice and lock in some profit, then I might sell like the 255. And then, try, because there are ebbs and flows, and it's just sometimes I end up making a lot of money on the one that I was short, with the timing of it. But
yeah, absolutely.
Yeah. So there's just a couple tips, but folks, the market got rational on us while Mark was smart. Yeah.
That rally didn't last, did it?
No, it didn't.
Logic's winning.
Mark, will you just explain verticals real quick for Marsh Murray, and then we'll let you go?
Sure. You're doing what you said. You want to take in some premium to reduce the cost. So you're buying an at or slightly out of the money. When I do it, I like to buy an at the money or an out of the money. So with the S&P, with the SPY at 260, I put on the 250, 220 spread. So I bought the 250 put, which was 3.5% out of the money, and I sold the 220 put to reduce my cost. And that works out over and over again because that short option is subject to time decay at a much higher rate than the option, which, as it happened, the next day went in the money. Think about that. I bought it 10 points out of the money, and it was in the money yesterday, which is why I sort of said okay. But vertical put spreads, as Dennis said, in a climate of implied volatility elevated, is the only way to trade the short side, in my view, because the long put is so expensive that you're inclined to buy.
All right, Marc Chaikin is the founder of Chaikin Analytics. Marc, thanks for the extended time today, and we'll talk to you in a couple weeks.
My pleasure. Stay safe, guys.
All right, I want to bring your attention over to LK here. Luckin Coffee is the definition of a falling knife. It just hit a new all-time low. They had a filing out a few moments ago while Marc was talking that they have formed a special committee related to some unsavory behavior that may have included fabricating some transactions. So there could be some financial fraud involved here. And this thing dropped like a freaking brick. I mean, that's all there is to say about it.
I mean, in any market environment, accounting, I learned this a long time ago when I was trading and working at Oldie. The last thing the market wants to hear is accounting problems. Okay. So there you go. And that, you put everything else in, take into account what's going on there. The last thing you want to hear about is accounting problems, and you get punished for it. And that, I don't even know what to
We're
tell
down
you.
67% in this thing. This was a darling just at the beginning of January. This was a stock that everybody wanted to own. This thing was ripping. It had ripped in November to January, went up 200%. It has now given everything back and is now making new all-time lows. That's incredible. Incredible. One, thing, and I just want to point this out, is I've seen people talk about writing naked puts on different stocks. And, this is why I don't like writing puts.
Because this can happen.
This can happen, especially on, I'm not going to say it, but we know there's been, the accounting standards in China are much different than the accounting standards in the US.
To put it nicely.
It's just the way it is. Even the accounting standards, and obviously we didn't talk about in the COVID situation, they're counting the way they count the numbers over there. We're obviously different than the US here as well.
Just a little bit.
Hey, I stayed out of this discussion, man.
So anyways, that's all I'm saying. It's very, and now who knows? I mean, is it a good buy down? Who knows? When accounting, Kramer always uses the rules. When you hear accounting stuff, it equals sell. The thing just fell 70%. I mean, if you're in it, I can't even tell you what to do. There's no way to even tell you what to do on something like this. But horrible news for the bulls. I mean, this is just the way this market is. It's very finicky right now, but it doesn't even matter. When you got accounting issues, it doesn't matter what kind of market you're in. Stock's going down significantly. Special committee brought to the attention of the board. COO misconduct, including fabricating certain transactions. That does not sound good.
Yeah. Yep.
Sorry to the longs on that one. Bearer of bad news. Down 69% here now, down $8. I mean, sometimes there is, opportunities on the bounces. Let's go to Amarin, and it, put in this nice floor at $4 for 2 days in a row, and then started lifting here. And there was analysts that are saying they're going to appeal this. And, there is a hope trade here in AMRN. I thought it was getting down and dirty in this one, and like the 430, 440 area, because, you knew they're going to appeal it. It felt like, it didn't make a new low yesterday. That's why I was looking at it. I was like, it didn't take out yesterday's low, 395 to 4. And now it gets a big lift. Now it's up too much from those lows. But, if you're looking and not comparing it to Luckin Coffee, but what I like to do is let the dust settle for the first day. I mean, you might have thought this thing was cheap at 10. It's at 7 now. So, we let the dust settle, see what happens. If you're going to go in it for a trade, I almost always let the first day just what happens, and then look. And if the previous day's low can hold, at least you have a point of reference then.
Yes.
Because right now you have no point of reference. The stock has never been this low before. If you're buying it here, you're just trying to call the bottom. And I've lost a lot of money over my 20-year trading career trying to call bottoms.
I just want to put, Marc said a lot of things, and, we say a lot of things, and we don't want to, we definitely have our opinions and our slants towards the markets, and we discuss it. But I think one thing between you and Marc and myself, and one thing we've been really consistent about is this is just not a bounce back situation. This is just, everything's just not going to be peachy keen in May and June or July or August. This is a long-term structural change in our economy. This is the way people are going to conduct business. There's new businesses are going to emerge from this. There's bankruptcies that are going to be happening. There's some companies going to come out stronger. But just give you an example here, and this is not, me, Dennis, or Marc. Boeing is offering employees buyouts. As the CEO said, it will take years for the airlines and aerospace industry to recover from the coronavirus. I mean, how much better can it be put like that? I mean, and that's still being optimistic, saying that, we're going to recover, which eventually we will. But just trying to put a perspective on things, because we've been so conditioned over all these years, the markets, since 2008, to be confronted with something like this. It's very hard to change your psychology.
I think some industries could bounce back. I could see a scenario where, the fast food industry bounces back pretty quickly. But others could take, like you said, Joel, months.
But I don't
as
know.
long as they survive.
You know why
years.
I disagree with that? I disagree with that. Number one, because fast food is very unhealthy for you. Okay.
Yeah.
And if you spent $20 at McDonald's over a week, how many meals could you have going to Kroger's and buying $20 worth of food?
Yeah, I mean,
healthy food at a cheaper price.
I don't disagree with that. I'm just saying I could. This will take a long time to recover, but I could see a scenario where certain industries recover a lot sooner than others.
Very
the travel
quickly.
industry, travel will take years. Okay? But other industries won't. That's just my point.
Spencer, it's a fantastic point you're making. The ones that do survive, the restaurants that get through this, are going to bounce back very quickly once they get through it. But the question is, how long can some of these restaurants survive? I mean, you've got like Cheesecake Factory that is basically just sit down. They're not paying their rent.
Can't pay their rent.
Can't pay their rent. So this is a fantastic company. I love. You go to these things and they're lined up. I mean, it's a fantastic business.
I was there a month ago. I was at one a month ago.
Food. Fantastic business.
Where?
Cheesecake Factory.
Yeah.
It's so big portions.
I love big portion. America loves big portion. Joel, you're healthy, but America loves big portions. I love big portions. I'm a big eater. I'm 210 pounds. I'm a big
I just
eater.
want to say,
were you 200? I was
buying
running
a lot, but I can't leave the house now.
I was buying 200.
Joel, that was before this crisis.
That was before the crisis. Now I can't run. I go on my treadmill for 5 minutes. I need a Peloton.
You know what? I locked the market.
Peloton.
I locked the market. It was $199 offer, and I was 200 bid, and people thought it was free money. And I just stood there. It was an iceberg, or I should say, an ice cream berg, and that's what it was.
He's picking on me, guys and girls. I think he's picking on me again.
I know.
It's actually, I haven't weighed myself for a few days, but I'm probably approaching the 210 level. I can just feel it. My teeth start to get
once
a little
you
bit
take
bigger.
out 210, whoo, there's big
I've been
stocks.
as high as 215. 215 is the all-time high.
Man.
Here.
I'm at 214.75.
Selling all day, just sitting there, just iceberg, just sitting in front.
Yeah, and then he pulled back to 205. Oh my God, am I going to be bid at 205? Holy mackerel!
So before we went on this terrible tangent about my weight.
Back to the point.
I think it's one of the best tangents ever on the show.
So before we went on this terrible tangent about my weight, I just want to say, companies like the Cheesecake Factory are awesome businesses. If they get through this, they're going to be, this is going to be a good stock to buy if it gets through it. But now we don't know if it is going to be able to survive. It'll survive a month. it'll survive a couple months. If we're in like shutdown mode for 6 months, there's going to be a lot of shockers. Like that business is going under because these businesses are not designed to have zero revenue. They can take a hit like, oh, revenues are down 10% and that hurts a lot. When revenues fall 70, 80%, it's down significantly. Don't kid yourself about McDonald's. Best of breed in the restaurant world, the drive-thrus are still open. If they go into a lockdown and decide that, all it takes is one person getting sick from drive-through food, 1 or 2 people, and they all of a sudden say, no, drive-throughs have got to close, you could see McDonald's fall 20%, in a hurry and something like that. So we don't know. The drive-throughs are still open. I drove around. McDonald's drive-through is packed. So it's still getting a lot of business there. But we don't know how long the shutdown is going to go. And we don't know how much, if they lock it down, how many more businesses, even drive-throughs, could end up potentially being shut down, because that could happen. You think about, they asked Scott Gottlieb this on CNBC, and he kind of beat around the bush on the question a little bit. But, should we be ordering out? I am not ordering out because you don't know the person who is preparing your food. I know when it's boxed that, I can clean the outside of the box and get inside the box, and in all likelihood, that box food was prepared long ago. So, you're probably pretty fine on the stuff that's inside the box. A lot of it's machine prepared. But when you have somebody actually preparing your food, making your pizza, using the pepperonis, are they using gloves? Did they cough? Did they sneeze? Do they potentially have it? I mean, there is a possibility that, you can get, you're taking a risk. Now, Scott Gottlieb said balancing the risk with your sanity is important. So I'm not saying everybody stop getting takeout. I'm saying if that keeps you sane in an insane world here right now, by all means, order your takeout. But you are definitely taking on an increased risk. And that's what Scott Gottlieb was saying too on CNBC, by ordering takeout, because we don't know the driver, we don't know the person who prepared that food. So for me, with my 2 asthmatic kids and the one obviously severely asthmatic, I'm not taking that chance. For Joel, somebody's healthy, obviously, you're going to have exposure through Lisa too. I mean, maybe there's no chances you're willing to take. So it's all about your own risk tolerance. It's almost like back to like portfolio management. You're almost managing it in your own health as well. I personally am not doing any takeout. I haven't had any at all. No drive-throughs, nothing prepared. But I'm taking extra caution because of the asthmatic kids.
Okay, let me give you another scenario here. I call it the cheese chunk factory, not cheesecake.
He's going back to cheesecake.
Okay.
No, I think we're
You
past
must argue
this.
that this is not good food.
I think we're
Okay,
past
no.
this.
This is the last time, and then we can move on. Okay, these restaurants are going to change capacity. Okay, you're not going to want to sit as close to people, so there's going to be less capacity in these restaurants for a long time. Also, I mean, they're going to have to clean the booths every time. I mean, there's, people are going to sit farther apart. There's not going to be as much capacity. And, I just think people's perception of going out to dinner from an economic and a health standpoint, I don't want to put the restaurants in the same category as, the airlines and the cruise lines, but I still think they're no touch for me.
What about Disney World?
I don't want
What's
to give
gonna
my
happen with
thoughts
Disney
on
World?
Disney
How
World.
much revenue, Spencer? You looked it up. I don't have it in front of me. How much their overall revenue do you know is derived from parks?
Yeah, that was weeks ago. I could find it in like 30 seconds.
But then you think about also Disney with the movies. I mean, nobody's going to the movies. They're not even producing any movies here right now. Disney, fabulous franchise, fabulous business. You'd think you'd want to own this stock all day. But I'm scared. It's on my wish list. I'll add it. Actually, it's not, but it's on my wish list. But I'm not pulling the trigger here, because if we are shut down for a prolonged period of time, and even that, you were saying like travel's going to take a long time to bounce back. People aren't going to be that comfortable going to Disney World. I joked and said, oh, I'm going to Disney World when this thing's over. But, I'm going to be extra cautious. And there's going to be a lot of people that probably, those parks aren't going to be packed like they used to be, even when we reopen, because it's a place where everybody from all over the world goes.
Parks, experiences, and products are about 27% of revenue.
That's it, eh? What's the other side? Is it movies? Is that like the main, like
studio?
ESPN is not showing any sports right now.
Well,
ESPN's small though.
Listen. Well, no, it's not. It's part of the media networks. Okay, that's 24%. I'm sorry. That's if Parks is 27% of revenue, then media networks is like, I don't know, call it 25% of revenue. Okay. Studio entertainment. Let's do the math there real fast. Studio entertainment, that's movies, 11% of revenue, and direct to consumer and international is about 9% of revenue. So the biggest segments are by far the parks and their media networks. Those two account for about half the companies, or a little more than
Parks
half
is
the company's revenue.
significant. Parks is definitely significant at 27%. I mean, that's a thought process when you're coming in here and you're buying your Disney. I mean, I'm a big fan of the company long term, and I will try to buy it when we have light at the end of the tunnel. But if we are shut down, if Disney World's shut down for 6 months, or even if it's shut down for another 3, people are going to be spooked to go back there. It could be a losing money adventure for them for a while, which is insanity to think about.
Yep.
But I'm hands off until I get more clarity here.
And if you're out of, a lot of people save up for vacations and save up for a rainy day. When, let's think things bounce back with full open economy in June, boom, boom, boom. Are they going to run to Disney World? Are they going to, I mean, how much is, I haven't been there in a long time, but
it's
what's
crazy
a ticket?
expensive.
It's crazy
Crazy.
expensive.
So I was there a year ago.
So expensive.
Actually,
They're gonna
like 1 year ago today, I was in Disney World.
Yeah.
We did, so comparison purposes, me, my wife, and the 2 kids did Disney World 2 years ago. And we stayed at the park. We did it right up. Stayed right at Fort Wilderness. We had a cabin. Kids loved it. It was awesome. Awesome experience. Loved it.
$5,000.
That whole trip was $7,000.
Yep.
And we just did Dominican Republic or the next year, and that trip was $4,800. And we just did Jamaica, and that trip was like $5,200. So I mean, actually I asked the kids what they liked, and I'll ask them to rank them, and they like Jamaica the best because you're swimming and you're doing things, and that's what they like.
There was no one there.
Well, yeah, it was half full because I went 2-3 weeks before this thing all happened. I was ahead of it, apparently. I was a little worried when I got sick there for a week, but
I should have bought the weekly calls when you went to Jamaica, like the weekly 205s. They probably move real well there.
But let's talk about the cruise lines here, and we can just talk about the Carnival Cruise Line.
And don't forget Disney has a cruise line too.
Yeah, that's not going to be getting a lot of revenue. But what about this Carnival Cruise Lines? Their capital raise. So this did not go well. So they originally were trying to raise, I believe, 1.25 billion. And they had to give I believe a significant coupon on it. So yeah, here you go. Pricing 11.5% interest, and the convertible notes 5.75%. Pricing of 5.75%, but a convertible, they had to give it a discount. They had to price it at $8, and the stock closed yesterday, or not, didn't close yesterday, but it was up, at like 11 or 12. So significant discount and a huge coupon to raise the capital. They got it done. But with that being said, here's the stock at 790. So you've got some serious dilution going to happen, which is what we've been talking about. And how long does this keep the company afloat? Pun intended.
I wouldn't loan them a wooden nickel.
People do it. They got it done. They got it done. I don't know if they got as much as they wanted. Did they get it the whole thing? Yeah.
Can you find out what banks did it so you could short them?
Let me look here. Yeah.
So they did a 1.25 billion. It looks like on the convertible. I'm just trying to grab this. If I'm wrong, correct me, because I'm just grabbing this quickly here after not.
The offering was decreased to around 500 million. So that's what they got. 500 million.
They didn't even get it all.
They were trying for 1.25 billion. They didn't
even get it all.
500 million.
So they didn't even get it all. They offered, a huge coupon and, a deep discount to where the stock was trading on the convertible part of it, and they couldn't even get it all done. But they did get some. So scary, man. I think the Carnivals are the Carnival, the NCLH, and the RCL at this point in time are just a call option. Whether they're going to stay, we don't know whether they're going to survive or not. So you're coming in here and you're buying these things right now. It's just, you're basically gambling on survival. We don't know. There, you can say, well, how could those companies? But the debt and the servicing there, the expenses are just incredible, and it's going to take a long time for people to come back and go on a cruise. So scary. That is ground zero.
I just want to, before we wrap, pull up the chart of LK one more time here. You only see these moves typically with biotech stocks when they have. It's at $4. It went under 4.
That's why you don't try to call the bottom. It was at 750. Now it's a 4. The person who bought it at 750, these things don't bounce back. Like, they don't go 450 to 750, not very often. So it is still, it can lose it that fast. It's very hard to get it back. Because the person who just bought it at 4, you just bought it at 8 20 minutes ago. The person that buys it at 4, its stock's got to go up 100% from this point for you to get your money back from 20 minutes ago. Don't try to call bottoms. Don't be a hero.
Yeah,
Down 82%. Incredible fall.
yeah, just incredible. All right, Joel, any final word here on the markets here? I'll pull up a chart of the S&Ps.
Well, let's see here. Somehow we're still green on the session. We're still up 1175 here at 59.50. So that's the good news. The other good news is that we held the close from yesterday at 48 even, as your low stands at 48.50. So what I'm hoping for, but I can't guarantee, is that, we rally up maybe to the mid-range area. If we got anywhere in a 24.70 handle, be looking for a lower risk short. You take out that close, and then you are looking at the low from yesterday at 34 and a quarter. And for a long time, I was thinking, can we take back 50% of the rally from 21.74 up to 26.35 and a half? And that comes in right around 24.05. And that comes in right at your 5-day low at 24 and a quarter. So there it is. Hold the close, or we can definitely be looking at 2,400 today.
All right, that will put a bow on today's show. Want to thank our guest, Marc Chaikin. Thanks to everyone in our chats, both on YouTube and on premarket.benzinga.com. You can always catch the replay of our show on YouTube or the podcast version on whatever podcast platform you prefer. You can always shoot us an email, any questions, comments, concerns, premarket@benzinga.com. You also click on the link in the description of this video for a free trial and subsequent discount to Benzinga Pro. It's our real-time news service. Please remember, all the information from our show meant to be used as informational purposes, not for investing or trading advice. Joel and I will be back with you at 3:40 as the norm these past couple of weeks, and the whole crew will be back with you tomorrow morning. Everyone have a great day and be safe out there.